Brandt with United Lending, and I'm here today to talk about FHA loans and the benefits of using FHA, as well as some of the drawbacks to FHA. So to get started, just let me highlight some quick benefits. FHA is one of the best programs for a first-time homebuyer because of the minimal down payment that it requires. It only requires a 3.5% down payment. That can be from a couple of flexible sources. So for instance, obviously your savings, if you have savings for that, you can use that for your down payment. Gift fund from a family member, so if a mother, dad, brother, cousin, uncle, somebody like that wants to provide a gift to a borrower for the down payment, that's acceptable. Also, you can borrow against your 401k without penalty for your down payment. You can also take out a loan against your 401k or any other secured loan for that matter. So if you have a IRA, mutual fund, or like I like to say, a famous Elvis Presley record collection, you can borrow against that as well for your down payment. So those are acceptable sources for down payment. Again, it's 3.5% of the loan amount, which is not much considering that conventional loans require at least 5%, 10%, or 20% for great interest rates. One of the other best qualities about FHA is the interest rate itself. For instance, you can get a great interest rate on an FHA loan comparable to that of somebody putting 5 or 10% down on a conventional loan. So you're not getting hit for the fact that you're doing a lower down payment. One of the things that FHA does to ensure that their loans are paid on time is called mortgage insurance. And that's the drawback to FHA. The buyer has to pay mortgage insurance no matter what. So what that means is there's a monthly calculation for mortgage insurance for FHA, and that could be a significant amount of money over the life of the loan, and you have to keep it for at least 5 years. So that's a tough regulation when it comes to deciding what type of loan you're going to go with. But if you have, if you don't have a lot of funds for the down payment and the FHA makes sense for you, then the mortgage insurance is just a slight drawback. And right now it's tax deductible through the end of 2012. So that's a benefit to you, and as well as the other tax benefits you get with buying a house. The minimum credit score requirement for FHA is 640 with United Lending. So as long as you have above a 640, we can get you qualified, then you can get an FHA loan. The other requirement is the debt-to-income ratio. They are a little more lenient with debt-to-income ratios. So if you have a higher debt-to-income ratio, something around 40 or 45%, then the FHA would be a great option because they'll go up to 55%. Again, you don't lose anything in the interest rate for that, and you still get to make a 3.5% down payment, so you don't put down anything extra. Overall, these are some of the great factors regarding FHA. They're available to any house that qualifies. I mean, they don't have to specifically qualify for FHA. They just have to be in livable condition. And the other basic great thing about FHA is the loan amount. Here in Central Texas, the maximum loan amount is $288,750. So basically, that's about a $300,000 sales price with 3.5% down payment will get you that loan amount of $288,750. So with that being said, this is Michael Brandt. Call me if you have any questions. If you want to know more information, you can reach me at 512-592-5462, or you can email me at michael@unitedbrandt.com. Thanks. Take care.